At the end of August 19th, Toll Brothers stock, symbol TOL, shows up in the scanner one above 2, which detects an initial breakout from a consolidation area. At the end of the trading day, we see a few more things that support this trade idea. The most important is, of course, the smart money indicator, which shows with a green color, meaning that the right kind of buyers are jumping on board right now. If we look at the VWAP coming down from the May 15th high, we immediately recognize that it has already served as a strong support for the stock during its pullback in early August, when the entire market was in a rapid sell-off. We go ahead and anchor a second VWAP for a shorter time horizon from the recent high of July 31st, and then another signal appears from the golden cross indicator, which means that now the shorter-term buyers have also taken control. Note that the shorter-term VWAP is above the longer-term VWAP, and this means we have a correct bullish order between these two averages. The last thing we recognize is, and we can see here, the green dot in the 1 above 2 indicator. This is an open range bar between the breakout candle of August 19th and the low candle of August 8th, and this means that the last daily low is definitely enough to serve as a strong stop. Now we have a trigger, we have a stop, and as a result, we have a take profit target. The very next day, the automatic buy order, which is placed just above the high of the breakout candle, is filled, and the trade enters the portfolio. At the end of the day, there is a small paper loss, but there is no window of opportunity to improve stop location, so nothing is done. 2 days into the trade, the stock opens a strong gap up and continues to rise later most of the day. But in fact, after about 20 minutes from the opening, it is already meeting the automatic take-profit order that we prepared in advance based on the initial risk box of the trade. This is not necessarily a typical trade because it is shorter and smoother than most trades that reach the exit after 1 to 2 weeks on average, during which there is at least one window of opportunity to improve the stop price and reduce risk. Reducing risk is part of risk control, which is the #1 focus of any consistently profitable trader. The goal of the Daily Champ, both this channel and website, is more than just to provide winning strategies and tools for swing trading. It is also to create the right habits in you that will allow you to be consistent in implementing the strategies, because consistency is the key to lasting success. FOMO is another issue to deal with as you watch the stock making new highs after you exited the trade. Consistent winners should stick to their exit strategy at all times, rather than skipping between methods for the sake of temporary convenience. You never know when a stock comes back to you and wipes away all of your paper profits in case you didn't take them on time and as planned. It may or may not rise again down the road for more, but you must know who you are, an investor or a trader. You must know what is your entry time frame, but more importantly, what is your exit time frame. See you soon and take care.